half hour, and we've got retail sales out of the US. The last big data point of the week. We've got some more US data later on today, but really the retail sales is the last piece of data today. So let me just look. There we go. I say retail sales. We've had inflation and let me just put the chat back on. There we are. We've had inflation and the PPI data as well this week. Inflation was in line with expectations, but US CPI went to 7%. I'm sure you're all aware. Running hot yet again. PPI was also in line yesterday, but also at the hot end. So remember, the Fed are looking at their normalised measure of inflation at 2%. They take the CPI and other measures of inflation, particularly the CPI, the personal consumption and expenditure number, perhaps more significant than CPI than many other central banks do. But anyway, the upshot of it all is that obviously inflation is hot. It's running hotter than they expected. So this move to speed up the taper is moving forward. We've also got a talk of cutting the balance sheet much more quickly as well. And also, obviously, the rate hike cycle is now, four 25 basis point hikes have been talked about this week by certain central bankers and also some key analysts, particularly it was JP Morgan, not JP Morgan, it was Goldman Sachs earlier in the week talking about 4 rate hikes in 2022. So it's much more than many were expecting. So see how it all pans out. So good afternoon, Emma, and everybody else. I hope you're well and staying safe. Let me just get rid of me for a minute and bring up the charts. Let's just get rid of. I've got the Kiwi on here. I'm not quite sure where I've got to start with the Kiwi, but Kiwi Yen is one of the. Let's just bring this up. Kiwi Yen is one of the weakest performers today. Kiwi is down. Aussie's down. If we zoom this, zoom this in. So Kiwi Yen today. It's the daily chart. We start with the daily chart. See, it's a bit of a range here from like 78 to 77.55 to where we are at the moment. But if we look at today's chart, we can see there's one out. We've been descending from yesterday's break, this rejection of this 78.75 level we got to yesterday here on this 1 hour chart, and it's been weak ever since. Basically, that's been trending lower into close. A leg down this morning through the key 78 handle. We bounced off it a wee bit, couldn't break over the 9-period EMA here on the 1 hour time frame, and that's a nice little sort of bounce up and down and a big leg down in this current hour, or the previous hour I should say, and that's Kiwi Yen, one of our biggest movers today. So as ever, ladies and gentlemen, stick on here what you'd like to have a look at. I'll try and keep up with you all. There's lots of people in yesterday. Obviously, we'll take a break in 5 minutes for the data, the retail sales data. Again, remember the US are big shoppers. The consumer consumption is a huge section of the US economy, the free market, free open economy. So over 2/3 of US, let's get rid of that. US GDP comes through the consumer, through the pocket of the consumer. So see what rude health the consumer is in. As far as expectations, the core number is expected to tick down a bit, 0.2 of 1% from 0.3 of 1%. The headline number is expected to go back flat. So again, it's a bit of a weaker number we're expecting today, but that quite often surprises both up and down. We've also got import prices, and we've got the industrial production data as well later on. We had some good industrial production and manufacturing numbers out of the UK this month. Sterling's been on a bit of a rip, even though the Prime Minister, Mr Johnson, is under an awful lot of political pressure there, but markets seem to have shrugged that off. So let's have a look. Emma is asking about the Aussie. So let's have a look at the Aussie. Aussie being faring pretty well today. Dollar's being weak, as I'm sure you've all been following. Let's have a look at our major crosses. Where are we? Excuse me. I should have had a glass of water before I started. Excuse me. Imran, we'll come to gold in a minute. Somebody writing to me here in looks like I'm not sure what that looks like, but I don't understand. I'm sorry. And euro dollar, Mohammed, we'll come to you in a minute, guys. Okay. So Emma was up first with the Aussie. So let's find the Aussie on this lot here. So Australian dollar here on the 1 hour time frame. This is the 1 hour time frame, guys. The pink line here is the 21 exponential moving average on the 1 hour chart. So earlier in the week, we started the week off relatively well. We were under 72. We breached 72. We breached that key line in the sand here at 72.70. We've held over that yesterday. Went as high as 73. So we breached 73 where this pink line is. And then we started to move down as the dollar's weakened. The Aussies weakened against the dollar into close yesterday and again down today. So that's another one that's sort of down, found support at this 72.70 from earlier in the week, bounced off that, couldn't get any higher, and then a significant candle here this morning for the Aussie against the dollar here. This big hammer, sort of hammer candle that's not the end of a downtrend, but we've got. Sorry, it's not a shooting star because we're not at the end of a top of an uptrend. But basically, it's a big rejection of higher prices. You could just read into that one single candle. We'd had a doji candle before that, and we'd had a rejection of higher prices the hour before that. So this morning, as European trades open, we were rejecting. Let's put that line in there. We're rejecting through here at .7992. So 73 had given up. Earlier, the day before, we'd moved down to the 70.70, bounced off it, rejected 72.93 twice in the 3 hours, and then continued to break under that line there. So technically, that would have gone sort of long then, and then flipped short there, further short there, and your sort of significant entry would have been an entry there really if you've been trading this lower, because it's and then here significant because we're below the low of the day here. At 2 o'clock, and we've gone down the last hour, so we're continuing to trip lower. Here on the 1 hour chart, you can see how the MACD histogram has run into the zero line, flattened out. Zero line, the signal line is just crossing the zero line, and the MACD histogram now is sort of starting to get bigger. So intraday, Emma, that's certainly gone short from a nice run up earlier in the week. Obviously, the Australians now are well into their Saturday morning. They had their big news earlier when Mr. Djokovic was asked to leave. His visa was rescinded for the second time. So say all that plays out. But that was late on Friday night Australia time. So the Australians well into their weekend, fast asleep most of them now. Obviously, the Americans are just coming into work. So here we are, Aussie going down, dollar going up. Where's the next level, I hear you cry? Well, the last big candle which we're into was this big leg up here from a Wednesday at 3 o'clock. So again, just before US Open. And that would take us back down to 72.15. So we're at 72.45 now. 72.15 is the next sort of congestion zone for the European session, excuse me, on Wednesday. So Aussie going down there against the American dollar. Everybody loves to trade gold. Imran's no different to everybody else. So good evening, Imran, in Pakistan. I can see your little flag there. Where are we? Where's gold gone? Gold's a bit... I can't really get too excited about gold anymore, but it's biased to the upside, having bounced off this 1788 level. I've said this many, many times. The big support on the end of day basis during December was this key 1770 level. So that's a key level here on an end of day basis. Obviously, we're a long way from where we are at the moment. Then 1788, then the psychological 1800. But what we're stuck with now, we're over 1800. So that's a key support area to the downside. We're now stuck trying to breach 1830. So 1830 is your upside, which we haven't got through in the last three intradays. We've closed below that at 1825 the last 2 days. And we can't breach 1830. So close of a daily candle above 1830 would be positive, because that would be the opening high of, above the closing high of the actual year. So actually close of December. The 1st of January, the first trading day of January this year was very, very volatile. We had a big down candle, engulfing all that previous action in the second half of, or most of the second half of December. We then slipped down to this 1788 level. We've bounced off that, but we can't break over this 1830. So there's some clear areas above and below where we trade at the moment. As far as intraday trading is concerned, Mohammed, hang on a minute. What can you see? Have I got that? I'm the wrong chart. I think they've shared the wrong screen. Yeah, I don't know if people can see Mohammed's question, but anyway. So where was I? I've lost my thread a bit there. Yeah, we were going. So intraday. Let's come down the time frame. So 4 hour remains bid between this 1815 and 1830 top here from this candle we broke through here on the 11th. So a few days ago we were up, and that's holding. So this 1815 area is holding. And as far as the 1 hour time frame is concerned, much more choppy. There's our 18. Well, it's 1816 here, 82. But that's a much more choppy, but again, sort of edging higher, not very clear. As far as today's concerned, Imran and everybody else, you can see the tops in here at 1827.73, and that's our top for the last couple of days as well. So that's a key level for you today, which we've already tested. And then above that, we actually got as high as 1829, so just over 1829 today. We may be having another go at it now. We've moved down for the last 3 or 4 hours with quite weak candles and lots of wicks to the south here, suggesting we don't want to go much lower. So we've put a low of the day in first thing this morning, and we tested it again in the last hour. So that's our support here at 1819.40, and our resistance. Our current hour resistance is up there at 1827.70, which has been the test for the day. So bias now to the upside in this one candle here. So we'll see how that goes. I don't know if that's moved because of the data. Let me just have a look at the data. Data has come in. The retail sales come in. Remember the core, we were looking at a gain of 0.2% from 0.1%, and it's a big miss. So it's a big miss for US retail sales data. It's coming at minus 2.3%. For the more important core numbers, more important than the headline, that's coming at negative 2.3%. So that's a big miss. And the headline is coming at minus 1.9%. So again, another big miss there. That was expected to remain flat at 0.0%, so nothing basically. But that's a big, significant miss. So the US shopper has disappeared for December. And whether they front-loaded their shopping in Black Friday and for Christmas, we'll see. But that's quite a significant miss. I haven't got any of the details here, the breakdown of them. I've just got the headline. So the headline, core retail sales minus 2.3%, headline minus 1.9%. It's a significant miss, and that's clearly weighed the dollar. We got a moving gold number here to the upside. So let's have a look. What's going on? So, okay, so gold moving up. So gold's testing that move to the upside, I'd say, on that one, Imran. Mohammed is asking about the euro. So let's look at the euro. Euro, it's a bit messy. That's the daily. It's zoomed in a wee bit. Let's zoom that one out a bit. So a euro had a good turnaround, sort of a breakout. This huge consolidation we'd had during December from this move down in November all the way down to 111.85. Consolidated for all of December, around holding over 113, couldn't get anywhere near 114, and then earlier this week, signs of breakout last week, in fact, here last Friday, positive candle down on Monday, up on Tuesday, big breakout here on Wednesday. Wednesday was our breakout. The follow through from Mr. Powell's testimony. Stronger inflation than expected yesterday. Stronger CPI on Thursday, and the PPI yesterday as well. So strong moved down for the dollar this week, and the euro itself has broken over that 115, so 114 area. So that's a key breakout, that, Mohammed, I would say. Initial breakout, certainly. So obviously, next line in the sand is 115. Is the next big round number. But as you can see, this day here, I hope you can see this red line here, this big red candle here. This was a significant move down here we had on the 10th of November, following the move down we had here at the end of October. So the dollar was gaining, euro was weakening quite significantly. So we moved all the way down. We've got this more aggressive Fed expected. Indecision during December through the two meetings from the Fed and the ECB. The ECB are now starting to play a little bit of catch up. They are starting to turn a wee bit more hawkish. Obviously, the Fed led. That's starting to get priced in. Even 4 rate hikes this year starting to get priced in. So the dollar's weakened in the second half of this week with those heavy inflation numbers. Remember, Treasuries, the 10-year Treasury went to 180, 1.8%, 80%, first time in a long time. So Euro's moved up. Next line in the sand to the upside is 115. Intraday, if you're trading this intraday, Mohammed, 4 hour remains positive. It's had a good run this last 2 days, from the 10th here, that breakout. See the breakout mill demonstrated there at that 1400 handle. And the 1 hour even more aggressive and rolled over a tad. So we've got high yesterday, we went higher again this morning. And intraday, we've rolled down a bit on ahead of the retail sales figures. Moved down in expectation, but bounced really. So you can see we're still above yesterday's low at the moment. We've been to test it at the moment. So 114.36 is your low from yesterday, your first sort of support area, having broken out there. So there's your support area. We're already in there. We sort of bounced off that, but that's still currently on the 1 hour time frame. That's angling to the downside. Okay, that's euro. Fabio, hope that's answered your question about the euro as well. If you want some more details, different time frames, again, just stick it in the box. I will get to you. There's lots of questions coming in here. Christian as well. A lot of you asking about the euro actually. So if you want a lower time frame than the hour, let me know. We'll have a look at that as well. Obviously, the lower time frames will be more volatile, but also moving to the downside. There's the hour. Let's just do this while we've got the euro here. So the 30-minute has broken low. There's that yesterday's lower. So we tested that. See how that's testing? It looks like that's currently holding at the moment. But again, you've been short from this first break here, sideways and then down. You're still trailing that down. 30-minute traders. 15-minute traders, still no sign of the turnaround. Here's that 1 hour support at that 114.40 zone, 114.38. See here for the last hour or so, we've gone sideways. The retail data has come out, spiked lower, might have taken some supports out, stop losses out, but that's still moving down. Some people might be seeing the turn, so it's not turned yet in the 15. The 5-minute looking like it's turning around, having looped down. So that will have closed out. But obviously, the big volatility on the news breaking went to 114. Let's zoom this up. This is the surprise miss for retail sales figures for the US there. So we went to 115.30 and then all the way down to 114.35, 114.52. So a big 15 pip range. And here we are. Remember, this is only the 5-minute candle, but that's looking relatively positive. And this low here on the 1 hour time frame certainly held. But here you can see the MACD. Zoom that in. For the 5-minute time frame, still negative, but looking to turn up. What have we got here? We've got RSI still benign, but it's now over 50. It's at 51 here. So Euro's definitely bid. Not definitely bid, but it's bid here in this 5-minute time frame, and the dollar definitely weaker on that retail sales number. It's a bit of a surprise. Miss Andy, we'll come. Let's have a look at the Dow. So the USA 30. Remember, the cash market obviously isn't open yet, but this is the cash spot market. So what's been going on here? So we had a big shakeout yesterday. The Dow was the best performing of the major exchanges yesterday, the major indexes yesterday in the US. The Nasdaq lost 2.5%. The Dow, the S&P was how much did the S&P go? The S&P was down 1.4%, and the Dow was down just half of 1%, 0.49 of 1%. So the Dow's been the best performing. That's been the case for a while now. And it's all to do with this sensitivity to the rate hikes and higher inflation and higher interest rates. The tech-sensitive Nasdaq, a big lump down yesterday. Very much those companies are dependent on future earnings or future profits or non-future profits in the case of some of them. And therefore, any significant increases in interest rates, although these are small increases in interest rates compared to where they've been, I would argue they are significant. They could be quite significant this year. But anyway, the Dow's benefited the best or performed the least worst. However, we have tested this blue line here. I hope you can see that, Mindy. This is the 50-day, I should say, 50-day simple moving average. We tested it last week. We tested it on Monday. We looked like we were rallying on Tuesday. Wednesday, Thursday we went down. We're down today again, back into this 50. So let me zoom this up for you. So this still looks pretty benign in the whole scheme of things, but relatively biased to the downside. So now, you could start now looking at a bit of a, whoops. A bit of a down trend here from the beginning of the year. I know it sounds a bit bizarre, or beginning of the month, beginning of last week. So that's a bit of a trend. You could bring your trend line closer to the actual body of the candle there. So that's tentatively, starting to look to form some sort of trend to the downside, because we're now under the purple line there is the 21 EMA, and our blue line here is the 50-day moving average, which sits here at 35,845. This big yellow line here sits at 35,626. I have no reason why it's in there, but it's usually in there for a reason. Maybe where the 50 period was a while back here at the beginning of December, maybe. And then the other key support here is the big round 35,000 itself, 35,000. That's becoming more significant. Not only the significance of the round number, but the 200-day simple moving average here, this golden line here is now coming up very gradually, because it's a 200-day moving average up to the 35,000 level. So that becomes a key support. So below where we are at the moment, 35,850, then 35,620, and then the 35,000, which marked this low here on the 17th and the 21st, ahead of Christmas, before the Santa rally really kicked in. The shakeout in the middle of December, fairly typical. It's a nice start, shakeout, and a rally into the year end. Normally we get a January effect as well to the upside. However, at the moment, 35,800 is being tested, 35,600 and 35,000. Then the areas to the downside, Ms. Masindi. I hope that's answered your question. Obviously, to the upside, we need to start this trend line will now come into play around about 36,200. If I can draw it properly. It's not great, is it? I'm hopeless with trend lines. Oh, I'm sorry. But it's not great. But anyway, I sort of get my drift. It's a bit too tight, that I would say, at the moment. But it's shaking out. So watch this line here, this intraday low we had, which took us down here to 35,625. Okay? Oh, that's answered your question. Fabiolo, I hope I've answered your question regarding the euro. If not, stick another question in. Dollar yen, well, what a run this one's had. It's been phenomenally strong, and then it's turned around the last few days really, really weak. This is dollar yen on the 1 hour time frame, going all the way back to the beginning of the year, the 4th of January here, when we went over 116 for basically the end of whole day, half of the next day, and the beginning of the next day. And then since then we've breached, and we've legged down 1, 2, 3, 4, 5, 6, 7, 8, 9. So we moved down, consolidate, moved down, consolidate. Big leg down here earlier in the week on the 12th as the dollar weakened, consolidated a wee bit, sold off in the European session, sold off again yesterday in the US session, down in the Asian and European session. A bit of a retrace ahead of the US Open, then we've moved down again today. So dollar yen continues to unwind. So let's zoom this up. This is the 1 hour time frame. We're now trading at 113.55. If we look at the daily time frame, there's that rally we talked about into the second half of December as the dollar weakened. Started January really well. For an end of day trader, he would have triggered, or using this strategy anyway, he would have gone. That's a short position. Confirmed here on the 12th, just earlier this week on Wednesday. Down again yesterday, down again today so far. So if we look to the left, we're into a bit of congestion area now at 113.50. Next level is obviously 55 pips below that, which is quite a move for the for the dollar yen. That's over a day's typical movement, 150 odd pips down. The ATR is 58 pips. That's a typical amount of pips the dollar yen moves on a particular day, averaged over 14 days. That's what the ATR 14 means. So we've already moved quite significantly more than that today. So the next support comes at the big psychological 113 itself, and then this December low here. See how that lasted for 1, 2, 3, 4 days, having tested it on the first day, and then for 4 days it held over that 5-day period at 112.70. So MACD is starting to roll over. The signal line still hasn't moved down here on the daily time frame. What else? I've only got RSI on here, and it's showing a negative correlation with the price descent here. So we're moving in to a potentially overbought situation here as we descend to 37. So that's weak. That's weak. So the daily's down, the 4 hours down. This is the 4 hour time frame. Una, I don't know what time frame you're trading in, my friend, but that's down. The 1 hour hasn't turned around at all, as we saw before. It was looping, and here we are pushing new lows again. 30 minute just as much, still down. 15 minutes still down. 5 minutes still down. It's not looking good for dollar yen today. It will turn around eventually, but even the 1 minute time frame is moving down all day. So that's dollar yen. A big weak move here from the 116.30. So a huge move down under its 20-day moving average here this week, and then down yesterday and down again today. 113 is the next key psychological support. Technical support sits at 112.70 to the downside for dollar yen. Dollar CAD, very similar story, Kagi. So obviously the Canadian dollar being supported by the strong rally in the oil market. I'm surprised more of you don't trade oil. Oil is a really good trade. It's been trending really well. Have a look at trading oil. It's constantly in the news. It's a key reference to the news. Big geopolitical asset. If you haven't traded it, have a look at it. It trades as well as any of the forex pairs, in my humble opinion, for whatever that is worth. So dollar CAD, another one that was all the way up here at the beginning of January. So the highs for the year so far. I know it sounds crazy, but this happens quite often. The first week of the year can be quite interesting in the rest in predicting perhaps the rest of the year. But predictions are not something we're into. Follow the trend. Follow what the chart is telling you. So 128, we were on the 6th of January. Here we are under the big psychological 125. I say this all the time. Fives and zeros are big round psychological numbers. They happen all the time in markets. When they get to them, they can be quite significant. As you can see here, as we breached 126, we didn't stall at all at 126, did we here? Back early in the week, and we just moved down. But when we got to 125, we weren't too sure about whether we were going to let it go. So into the close here on Wednesday, start of business yesterday, we held on to it. Then we dipped down. Let's see how low we can go, said the market makers. Down we went. We even went under that line I've got on there. So our current week low and current trend low sits at 124.52. So just above the psychological next 50 number, 124.52. So 124.52 above 124.50. Yesterday, we've recovered today, back over the 125. Dollars come back to life, ironically, with the retail sales. So there must be some negative oil or negative Canadian data as well at the moment, which I've missed today. So let me see what Canadian data. Indeed, there wasn't any Canadian data. It's just the dollars got cheap enough or moved far enough. No, it's something else. Some other news I've missed. There was some obviously some good. I mentioned about the retail sale, not the retail sales, the earnings. The first of the earnings numbers came out this morning. JP Morgan, Wells Fargo, and BlackRock also beating earnings, but they were a very mixed bag. Wells Fargo looked like the best of the ones I've looked at the moment, beating JP Morgan beat, but they've disappointed on their outlook as well. So will pull down the financial sector of the stock markets. But dollar CAD certainly come back to life in the last hour or so. So back over 125. How far that's going to run, don't know, but that's quite a strong recovery. So having looped down all week, we've breached over our high from yesterday and this morning here at 125.19. So 125.20 is our support now as we move forward for the rest of the trading day. Where's my line? There we go. 125.19, but let's call it 125.20. We've broken over that. Two strong candles at the moment. Obviously, this one isn't complete, but that's certainly turned around. As we came down quite nicely, we might go back up quite nicely. So 126, still a bit of obviously way of a stretch. Next resistance would be through here at 125.60. So 125.60, just above the 125.50 as our next target to the upside if this dollar CAD completes its continuation to move to the north. Let me just see if I've got any friends over on Facebook, because I can't see their names coming through like I can with you guys here on YouTube. No, I've lost them. Where's he gone? Right, so just bear with me a second. Hello, somebody's advertising here. It doesn't want to open up. Why doesn't it want to open up? Come on. No, it's not working. Never mind. Right, let's get back to you guys. See if Andrew can send me some information. No, there's nothing there. Okay. Where are we? Yeah, dollar CAD. So dollar CAD's moved up. We breached the 125. Okay, Fabio. Thank you, Andrea. Fabio was asking about euro, wasn't he, earlier? Fabio, good morning to you, sir. Hope you're well. You can indeed, Andrea. I don't know if you can hear me. Thank you very much. So you're from, I can see where you're all from now. You're all from all over the world. So I've got Nigeria, Guatemala, Zambia, Kenya, Nigeria. Good afternoon, good morning, good evening. Good evening, Imran. Hope you're well. So where was I? CAD. Yeah, dollar CAD for Kagiso. Yeah, moved out. But remember, you're very much against the trend if you're trying to take this long. This is the daily time frame. Kagi. So you can see the 20-day moving average is all the way up there at 126.75. So it's bounced yesterday. It's bounced off 125. And see what's also provided support at the big psychological 125. That's our 200-day moving average. So it's a big, big, thick wall. So we ran into it. We ran through it. 120, it's the yellow line. So that's why the support held. Then we dipped down. How low can we go? Testing lower. Found some support down here. We started to move up yesterday. Strong candle into close. I remember in your first indication we were moving up. Tested higher. We got to 125.20. We bounced off that on open in the Asian session. Moved down in the European session. Didn't get as low as the low from yesterday. So that's a positive. And that's the big first positive candle we've had for a long time, or for a day, But generally we've been going down all week. So one yesterday, signing the bottom. One yesterday, signing a first test higher, and then today now. So our third one has been. See, they're all the same sort of size, so that's positive. And now words seem to be breaking out. So 125.20 is your support. 120, 20 pips below that is your big fat 200-day support. You'd like to see RSI's at 63 and rising quite nicely. Stochastics rising quite nicely. Nice now to see the MACD tick over the zero line as well, and that signal line tick up to the. So it's wobbling about a bit, trying to see it tick up to the upside. My friend Mohammed, sir, news is not good for US dollar. Well, yeah, no, it was significantly worse than expected. So. The theory is, bad news for the dollar is bad. bad news, negative miss for data is bad for the dollar. As we saw, it was against the euro, but as you can see here against the CAD, it's got as bad as it's got, so it's started to take off. I know that might sound a bit flippant, but that's what happens. Let's just run through the other crosses. So dollar yen here on the news. We go down to the 15-minute. You can see how the dollar was weak, and it's continued to be weak against the Japanese yen as the data's come out. We did that before, didn't we? Sterling, where's Sterling gone? Sterling's been strong. Zoom in on the 1 hour, being very strong over 137, but again it's moving down here in this last few hours. Lots of political news in the UK as well, so 137 looks like it's a bit of a stretch too far. 137.50 certainly was, but if 137 holds today into close, that'll be a positive close for cable again. But as you can see here on this, this is the 30-minute chart. So the 30-minute big support sits down there at 136.55. 136.70 is on there for a reason. I can't remember what that. I think it's from an hour chart, isn't it? Yeah, it's that big candle we had up on also on Wednesday when we breached 136.70. That's gone from a while back, 136.70. So cable down, so dollars up against the CAD, up against sterling. So you can see, Mohammed, it's mixed. It's not necessarily doing what you might expect it to do. Don't trade what you see, not necessarily what you think, and don't overthink things. We had this first indication that this was a bit too high yesterday. Couldn't get higher, and then the high today was lower than yesterday's high. So that's the first suggestion. So now, if this indeed is going to roll over, you'd want this to break and close under 137 for the close of the week as well. Obviously, still some time to go before the close of Friday. So that's cable. Anyway, let's get on to some other news. So no, Mohammed, you're right. It wasn't good news for the US economy. It was a big miss, those retail sales numbers, and dollars being mixed, though, from it, generally biased to the downside. Euro yen, where's my euro yen? Here we are, euro yen, key cross. Euro yen here on the daily Lecky American Bullies candle. Okay, American Bullies, big dogs, Lecky, my friend. I hope you look after them properly. I'm sure you do. So here we had a rally here in October. We descended, trended really, a trend following followers. A lovely rally down here. A classic into 127.42, so under 127.50. 27.50 would have been plenty for your pips. Then we rallied, couldn't get over 129. 128.95 was our high here at the beginning of December, and then we broke out of that rally. I'm sure I've done this before, and that's why these lines are on here. Then we broke out of that. First indication was here on the whenever it was, the 20th. No, what was that? The 21st. Breakout was the 21st. Sorry, 20th, 21st. Breakout for the candles. Signal line was moving up. The histograms were getting smaller. It was all looking pretty good. We rallied. We got as high as 131. Couldn't get much above that. We topped out at 131.20, 131.20, 131.40 was our range for 1, 2, 3, 4, 5, 6, 7 days. Yesterday was today's been our sell-off, closing out. So that any long position you've had here would in fact have been closed out here on the 10th. So that hasn't yet gone short, but it's certainly struggling to get any higher. Over 131 is the big line in the sand. 130 is the next psychological support, which we are currently breached through. So really our next support then comes down to here, this 128.95, which is the range we were in before we broke out in December. So we breached 130. ATR on this one is about 82 pips a day, so it's not much of a move further down to test this low if this concludes this today. Lecky, if you're trading that on an end of day basis, for the lower time frame, they would have already rolled over. So if we go down to the 4 hour, you can see there, you see that demonstrates this 131.40 high from last week, this week, and then that's a significant candle here, reverse it. So obviously we went up there, and then the two candles that followed reversed quite significantly, but we hadn't broken out the bottom until literally today, have we? So there's our floor back to this week, which we've broken through in this current 4-hour candle. But it also, interestingly, breaks through the psychological 130, and it also takes us a low for 2 weeks and takes us all the way back to this cluster here just after the Christmas week in low volume. So this is much higher volumes today. RSI is moving down 30, moving quite down nicely. So your 4-hour trade is short, and your 1-hour trader was very much short as well. There's that 2-day from yesterday and today, and on Wednesday that 130, 140 getting tested again. I hope you're short on that one, Lecky, and it's the trend is very much with you there, my friend Christian. Hope you're well. Hope you're staying safe. I hope you were here early when I talked about the Euro, Christina, sorry, and you're enjoying your summer. I'm assuming you're in, from your name, I'm assuming you're in South Africa. You might actually be in Holland, of course, might you? But anyway, if I haven't completed it properly for you, Christina, add another question at the bottom. We'll get to it, okay? Emmanuel, good afternoon, good morning, good evening. I don't know where you are, my friend, but hello. Pound Swissy. So as I say, pound sterling's been very strong recently. Let's have a look. Actually, let's have a look at the pound crosses. You see how strong pound's been, even with the Prime Minister potentially under lots and lots of political pressure, but fighting off currently, probably because they haven't got anybody better at the moment. So Kiwi, interesting. There we go. I've got this. I've obviously had a look at this before. This is our last leg down here. This is the weekly. I don't know why I got this on here, but weekly here. This takes us all the way back to August. So a big move down. So if you got the daily time frame, that's looking. I don't suppose you're trading the weekly, are you, Emmanuel? But so daily has been nice, steady. So that was our, this is going all the way back. Where's this going back? Yeah, August. This is the daily from this leg down. And we've gone up, we've consolidated. We consolidated here through December, but a nice breakout of this level here. See how that's, don't make this stuff up. 61.8 retrace of this move down from the summer to the end of November. That was the key level. Tested it. Finally broke through it and rallied quite nicely at 196. Then we got to the key psychological 2. So 2 pound at 2.00 against the Kiwi dollar. Back to our high here from the last leg down here. From this takes us all the way back to August. We've obviously done this before, Emmanuel, haven't we, on this pair? This is why this is set up. So, sort of 2 big psychological levels. So if we let me zoom out, in fact, and go up the weekly time frame. So I didn't mean to zoom out that far, but as you can see, 2. This is the top line here, 2.00, back to our March high. Last time we were up here, it takes us all the way back to August, again, summertime, August 2020. And then before that, it takes us all the way back to March 2020 when we got to 2.08. And that just happens to be, surprise, the 161.8 Fibonacci extension of this sell-off we had there. So no surprise to me, really. So 2.084, what's that? 0.0848 is the next level to the upside. Obviously, still a long way from this 2 if we hold it, but it's been a strong December, a strong start to January, and we've followed through this week as well. So if we hold over 2, that's looking quite strong. Obviously, you'd expect a bit of consolidation around this level, Emmanuel. So that's certainly to the upside. As far as intraday would concern, we see a bit of a consolidation around these levels. So there we go. This week, this is this week on the 4-hour for this pair. Consolidating, still holding over 2. We had a dip under it earlier this week, back over it. So 4 hours gone long again. Looking for those highs on the end of closing candles at 2.0100. So that's again another big round number. Like to break that. The 4-hour candle, we're going to move to the upside, and the 4-hour much more of a move down. So we've got some nice pips going down under the psychological 2. We didn't go much lower. Yesterday was our low at 199. What's that? 199.40. Triggered long this morning. Stalled at 2. Over, under it, back over. Then we've broken out this afternoon, and we continue to track higher. Perhaps back into this level here, 2.009 for the 1 hour trades for pound against the Kiwi. If sterling's going to hold its bid into the weekend, and obviously Kiwi traders, they're all in bed as well now. At last, somebody's asking about oil. George, hello, my friends. Good afternoon. Somebody's interested in trading oil. I don't know where you are in the world, George, but yeah, not many of us look at the oil charts. But welcome, my friend. So where am I? I'm in the wrong crosses. Do I look at crude oil? Well, actually, let's look at the commodities, because you haven't said whether it's US oil or UK oil, Brent or WTI. But let's have a look what we've got here. This is the spot price. This is oil, usoil.s. So it's WTI on the spot price. It's a bit higher than the. There we go. Those other charts on the default chart settings. So actually, let me go back to because I've got lots of lines on my default chart. So let me go back to US oil on my chart, because it's got the lines on the 80s and the 81s. Okay, just bear with me a second, George. Let me find oil. So US oil here is the cash market. So big lines here. This is the 1 hour. Let's go to the daily first. So we've had a big move. I'm saying from Kenya, George. So I was guessing you might have been from Nigeria, but Kenya. Nothing wrong with Kenyan oil traders. Obviously, bigger coffee exporters and oil exporters, but lots of natural power in Kenya as well, isn't there? With the volcanicity and what have you. Anyway, story for another day. So oil recovered into the second half of December. Over the $70 handle, which we stalled at here in the middle of December. It was spiking all the way down to 65.88. So broke 70. The next big psychological 75 into the close of the year as a strong close. And we've had a really strong start to the new year, haven't we? So over the big psychological $80 a barrel, which is now current support, our 20-day moving average is all the way down there at $77. So $80 the big psychological support. Technical 20-day moving average is at $77. And here we are at 82, trying to test this 83. Next line here is this 83. On some charts, some markets, it's gone over 83 this week. But that remains bid. Lots of things driving the oil price. We've got a very tight inventory profile. Big drawdowns again this week, in fact. Production is, they can't scale it up very quickly. They're at sort of levels. There's lots of maintenance that hasn't happened because of the pandemic. There's all sorts of things going on. There was some crisis in Libya from production. There's obviously been the conflict and the unrest in Kazakhstan, which is a big oil producer. Russia playing hardball as well in Ukraine, major supplier outside of OPEC, OPEC plus player. They've agreed to 400,000 barrels a day for January. They've extended it into February as well this month. So the market is perhaps demanding more. The pressure from Omicron is starting to show some signs of easing quite significantly. There's certainly the death count not as high. Hospitalizations, although hospitals are getting filling up again, people aren't as sick. But there's certainly the issue is the actual scale of the sick people. There's an awful lot more of them than there were this time last year, but they're less sick. So this is Omicron, but obviously Delta's still around, and other variants. The COVID crisis is still around. It hasn't gone away, but certainly the Omicron worries has dissipated. So the outlook for 2022 is looking relatively positive for the global economy. Obviously, enough so the Fed are going to have to put some brakes on the US economy by putting interest rates up. So has oil already ran as far as it's going to run? Lots of banks 3 months ago were talking about $85 as the pivot for the year. So we're already at 82 and 83, and obviously that big high we got to back in October in the beginning of the winter. So If we go to the weekly time frame for oil, you can see it's a bad chart because um, it's the daily time frame, but you can see we're sort of looping high, and that's not a great chart pattern for any further strength to the upside, to be honest. But as you can see here, that we're into our fourth consecutive strong week of gains for oil. So it's still big. 83 is the next big target to the upside. I say on some markets you would have already tagged that, so lots of profit would have been taken up there, that psychological level. But if you're a day trader or an end of day trader, you're trading this as as an asset moving forward. It triggered long here on this strategy here on the 22nd of December. The signal line broke the zero line here at the beginning of the year, having cooled for a few days into the end of the year, and it's rallied significantly since then. RSI is at 68, still rising. It's not yet overbought. 83 is the next target, and then obviously the psychological 85 if we move higher. But remember, markets are always looking forward. We're still in the middle of winter here in the Northern Hemisphere. Still only the middle of January, so still a good 6-8 weeks to go before things start to mellow a wee bit. So demand will still be quite highly pinned. So George, it's still bid to the upside. Chindra, hello, you were here yesterday. I remember seeing you yesterday. What should we expect from dollar next week? Well, let's have a look, shall we? And it's a really good question. What should we expect from dollar next week? Well, firstly, let's have a look at our calendar. So next week, I haven't got my calendar here in front of me, but let's have a look. So next week, where are we? Sunday through to 22nd. Apply settings. There we go. So what's coming ahead? Monday, before we all get up, or certainly before I get up, 4 o'clock in the morning, we got GDP, quarterly GDP from China. That's not going to move things much. We got the Bank of Japan outlook. They started talking, trying to start talking hawkish this week. It's Martin Luther King Day, isn't it, on Monday? So this is a long weekend as well. I've forgotten about that. Excuse me, completely forgotten about that. So the close today will be quite significant. Dollar traders, markets are closed on Monday, celebrating Martin Luther King Day, and everything's closed. It's the bond market, the equity markets, banks are all closed to celebrate Dr. Martin Luther King on Monday. So I've forgotten about that one. The third Monday of January. But later in the week, Bank of Japan, as I was starting to say, they've started to try to talk more hawkish like everybody else. But really, inflation, with inflation running, or CPI in the US, for instance, at 7%, it's less than 0.1 of 1% in Japan. It's just not happening there. They're still talking about a 2% inflation target eventually. I mean, it will feed through eventually. Prices in Japan will feed through. But the weaker yen we'd had up until this last few days, when it's turned around quite significantly, obviously great for Japanese exports, not so for Japanese imports, but that's turned around now quite significantly, hasn't it? So Bank of Japan, with their press conference overnight on Tuesday. We've got ZEW out of Europe, German economic sentiment on Tuesday as well. UK inflation on Wednesday. Inflation from Canada, they're both, that's a monthly number. We got the Bank of England Premier Governor speaking. It's not a great deal of data, is it, next week? Employment change from Australia on Thursday. These are just the highlights I'm looking at. Philly Fed, Empire State as well. Final reading of European inflation. So it's an inflation week, really. Not a lot of key. Let me just get that right. Let me just double check that. Yeah, not a lot of key US data. We've had a lot already. Remember, we had an NFP last Friday, a lot of it data last week. So to answer your question, Chindra, not a great deal of things driving the dollar. So where are we? What does that mean then? So where are we if there's not a lot of data going to drive things? So what have we got here? This is the dollar index. Remember what the dollar index is, guys? It's an index of the strength or weakness of the dollar, and it's comprised of 6 other key currencies, euro being the most significant of the 6 that are in there. From a weighting point of view, it includes things you might consider to be in there. It's not just the major 6. It includes the Swiss crown, for instance. But dollar had been consolidating for all of December, following a really strong rally in the second half of November. So we were down here at 94. It didn't sound a lot this, but it's a significant move for the dollar index. We rallied from 94 to 95 to 96, and we went as high as within 7 pips of 97. So it's a very, very significant rally for November. We then consolidated and went sideways for all of March, all of December, closing, as you can see, on the down. We then had some rebalancing on the first trading day of the year. We tried to move up, but we couldn't hold the 96.30 level. We rolled over a rounding top, and then we've moved down from this big down day here on the 7th last Friday after non-farm payroll. Okay, that wasn't the killer. The killer was later this week when Mr. Powell talked about obviously the high inflation data coming out. Powell talking about the balance of the balance sheet getting and not rushing in to get it trimmed. So that lifted stocks and weighed on the dollar. So we've breached this 95.60 level, this low here we'd had for December. Remember, for December, having rallied up. Big down day here on Wednesday, followed through yesterday, down again. We closed under the big psychological 95, which we'd been under from the beginning of November for all this time. So it was a significant day on Wednesday when we moved down. Again, this strategy was triggered short here earlier last week on Friday into Friday's close. Followed through yesterday, and 94.50 is the next line in the sand for dollar index. So for next week, Chindra, my friend, the pressure remains to the downside, 94.50, and even 94 maybe if the big unwind happens. But remember, we haven't got a lot of economic data driving the dollar next week, but we have got obviously political things going on. We've got the ongoing talks between the US and the Russians with regard to the situation in Ukraine. Lavrov earlier today was spinning relatively negative tones on it, saying what might happen if it's an agreement. There's some serious negotiators on the US side involved. So again, they're still talking, it's still going on. We've got the situation with the Iranian nuclear deal as well, that's still ongoing. We've got the North Koreans firing missiles into the sea over Japan. They've done it 3 or 4 times now. They haven't had a response from anybody yet, but they're going to keep pushing it until they perhaps do. And so they're the sort of things that could unhinge things or unwind things a wee bit. But certainly the big news this week of the inflation and Chair Powell's announcement, not announcement, but I'm going to say testimony. It wasn't really testimony. It was him trying to get his job back, basically. He was pitching for a second term to the Senate this week, and along with Lael Barnard, both talking about inflation being significant. But I said the chair did sort of downgrade how quickly the balance sheet was going to get attacked, even though many members of the Fed now getting quite hawkish in their outlook and their protestations as well. So pressure to the downside. So all of that waffle. 94.50 is your next support, and then 94 itself. You can see that coincides with this big candle here from the 10th of November. Remember, we said that date a few times before, haven't we? 10th of November. Looking at what happened on the 10th of November, I'm going to tell you, actually, it's a significant day, and that rallied the dollar. 10th of November low took us to 94. Okay, so pressure the dollar, I would say. Chindra, watch that to the downside, right? Just excuse me. Where am I? Lone Survivor, hello. I'm not sure if I got somebody's pinned a message. What does that mean? Crude oil. Or did I pin it? I think I pinned it, didn't I? Lone Star saying hello. That's not a problem. Euro Swiss. Chichet. Not one I look at all the time. Not the most exciting pair, but it does move just like everything else moves. Where am I? There we go. Euro Swiss. I don't know. I've got it here, have I? No, let me go to the Euro profiles. So profiles. Euro. Sorry, I normally switch my messaging off when I'm doing this, but people are messaging me at the moment, so just bear with me a second. My colleague in Pakistan has just sent me a photograph of his daughter on her third birthday. Adnan, have a great weekend, my friend. Stay safe. Love to your family and your beautiful daughter. She looks fantastic in that lovely little red dress. So I don't know if you're here, but I hope you're not. I hope you're enjoying your weekend. So take care, my friend. That's a great photograph of you and your family. Where were we? Swissy against the Euro. So Euro Swiss. Let's have a look at this. Right. It's a bit of a different template, but it doesn't matter. You can still see the theory here. This is the 1 hour for Euro Swiss Chicha. I don't know what time frame you're looking at it. As you can see clearly earlier in the week, we had some sort of resistance up here. And that took us to 105. That's a clean number. How high did we actually get earlier in the week? Let me just move that intraday. Oh, come along. Candle line, but there we are. 105.07. That was what's this? This is 1 hour. Yeah, so that was on the 11th, and we've been looping down ever since. So it consolidated here. You can see that. See the consolidation we had here. Now a big leg down here at this is the so when was this? This was the 12th. Retrace down again. So we're under the 20-hour moving average. What the blue line is, the 20 moving average. The indicator down here is the rate of change. I don't know if you can see it. Let me just get rid of. Let me just hide. Cheats me. So this is the rate of change. I did a webinar on the rate of change. Nice indicator suggesting it's a momentum indicator. So when it's above zero, it's fairly positive. So you put a little indicator on here. So you can see here that it's gone over zero here. It didn't happen, but here, there we go. See, that's really quite succinct, isn't it? So rate of change there, quite a nice little indicator. Positive, it's over the zero line, it's lying up, and here we are. And you use perhaps this one here. You could have used the 20 period moving average to keep you in. So you'd have gone long there and got out here a few days later. Nice move. But here, as far as the momentum was concerned, it was still above the zero line, wasn't it? But again, went under there, didn't happen, went under there. So it's consolidated here. So basically, when it's around the zero line, the rate of change, there's not much rate of change, so there's no momentum, so therefore there's no direction. Remember what momentum was from your physics class. And that's basically what it is. It's no momentum. So we were around zero, not doing anything. Prices was consolidating, but then we took off. It started to take off. We got above our highs here. Again, just using this simple indicator here, you can see we got to a new high here. But, combining this with the moving average, nice strong trend. We don't know at this point here, do we? It was positive because we were back above the zero line. Big, strong candle. We'd broken out. I'll zoom that up. We'd broken out of... move that back. We'd broken out of this sort of consolidation level, but we didn't know that was going to happen, did we? We didn't know that was going to happen at this point. But it's, we've kept with it, ran out of steam. There we go. So the momentum has gone sideways, just like the price has gone sideways. And so we'd have perhaps got out here as we've gone under the 20-hour moving average. Anyway, I'm blithering on, aren't I? Watch the webinar if you want to know how to use the rate of change indicator. It's very simple, quite effective. Nice one to use, certainly as a beginner, but not on its own. Use a moving average as well with it, or something else, or something. But whatever gets you going. This just happens to be the template that we're using at the moment. So, as you can see, Wednesday, Thursday, Friday, the highs are getting lower. The lows are certainly getting lower as well. And here we are, we're in a low for nearly the week, aren't we? This is because that's last Friday, wasn't it, on the NFP. So we're back to 104.20. I can hardly see that, sorry. Who was asking about those cheats? Sorry, I've lost your name. There we are. Chicha. So that's continuing to unwind. This is the 1 hour. The 4 hour is more volatile. We move much higher, but those levels are still in play. Move down. Where's that going to go now for 4 hour? Well, nobody really knows, do we? Well, what's the indicator telling us? Well, we're here. We're congesting here back to the 20th of December now in the 4 hour time frame. Here, holding quite nicely at the moment. That's a key level there, 104. And then there's another level through here. So for 4 hour traders, there's a bit of a zone. Let me just put that on. So for 4 hour traders, there's a zone. Where's my line not working? There we are. There's a zone down here which provides some sort of support. That's 1.0385. And before that, well, really, as you can see, it's gone down. It went up quite nicely. Equally, it could go down quite nicely. It's obviously jagged up and it's sort of jagging down. But that's currently under its 20. This is the 20, still the 20 period moving average for the 4 hour trade. So it's under that. That's looking quite weak this week, or since certainly since what's this? This is, since the beginning of the year, and that's continued to move down. So next support, just is through here. These candle highs here, these candle lows here. So that's about 104. So 1.04 from where we are, 1.420. So there's another 20 pips, perhaps into the close of the week. Who knows? Here you can see the momentum has been going. Again, going back to the rate of change indicator, but we've got over. You could argue we've got a bit over. So we got to got a low point here. Look at that on this 4 hour. Oh my word! Come along. There we are. We got down here. So the rate of change is cooling as it's moving, but it's the momentum has taken down because these big candle up, big candle down. So that's still moving down. It needs to get back over the zero line if it's going to move up. So it's spiked up relatively significantly, but that might be running out of steam as well. So 104.02 and then 103.85. We're going to move back up. You'd like to see that break back over that level there, 104.44. Cheap chat. That's on the 4 hour. 1 hour, this setup again looping down under the 20 hour this time again. So that's could certainly move down there. That's gone negative on the 1 hour in this candle here to the downside. So that's still looking negative on the 1 hour as well. Daily has obviously had a big sell off. It's had a big rally at the beginning of the year, but it's ran into that resistance. Now it's come back down, and that's where the 20. So it's still over its 20-day moving average, but we've had 2 days down into our third day down, and support is where that we had that support on the previous chart at that 104.40. So see where that finishes today. Do you check? Oh, that's answered your question. I don't know, I've lost where I am now. Oh, God. Chichet's also asking about the Kiwi. Kiwi's been weak. Let's go back to my. I've got the Kiwi profiles right now. So Kiwi, what's it got? Kiwi dollar here. Continuing to, this is the daily time frame. So it's been a week from October, consolidated in November, consolidated during December, but it went as low on this chart. We went as low here in the middle of December to 67. Big old move down. We're back to 68.68, or just over .68 at the moment. Let me put that in on this chart as well. .68 is around about there. A bit higher. There we are, right, 68. So we got to it, consolidated around it towards the end of December, fell under it, didn't get as low as we had in the middle of December, so that's relatively positive for now, as you can see. So we're sort of a bit of a rising wedge forming potentially. Psychological 68's been broken. Strong candle yesterday, breaking out, it's not yesterday but Wednesday, breaking out of the December highs, or testing the December highs yesterday, bound to test it. So that's positive. That's gone positive here on Wednesday, sort of angling up. And again, as we came down quite nicely during November, we may amble up during January, but who knows? Obviously, we can't tell that yet. But at the moment, looks like it's breaking out. That's enough to certainly close your short positions. If you went long, didn't happen. Went short, didn't happen. Is it going to go long again for the third time? So that's looking like that's perhaps trying to tick up. MACD is flattening. The signal line's starting to show some life, but it's too early to tell in the last couple of days. RSI is RSI is 51 still, so it's still in the neutral zone, but again it's moved up from these lows. So you'd look for a break of that sort of. Where's my slides aren't working? sort of the I mean, it's too. I was going to try and put that on there, so it's not worked out anyway. So 68's been broken basically, with this big move down to 67. So as I say, as we move down from .72, we could start moving back to the upside as well. Not that we will or anything, but it's looking quite a positive candle, that one on Wednesday. It's enough to ticked into a longish position. Cheetah, good day. What should we expect from I was asking that before. I have answered your question, my friend. Okay, hang on a minute. I'm going backwards here, aren't I? We just did. Mr. Wrong, George. That was talking about oil, wasn't it, George? Thank you very much, my friend. You made my afternoon. I don't know if you could tell. Theogi, I don't know if you're talking to me or to somebody else. This is enlightening, says Dennis. Good, Dennis. That's a nice word, enlightening. I hope you're seeing some wood for the trees. Addy, my friend. Hello. How are you? Welcome. Go and have your weekend. You don't want to be listening to me blether on, my friend. Go and have a nice weekend. Where are we? Where did I get to? Dennis said it's enlightening. Demir says I'm wrong. And Chit says thank you. That's not a problem. Right. Have I bored you all senseless? 16:32 was the last question. Yeah, I think I've answered all your questions, and I've been here for over an hour now, so it's 4:30 on Friday. We'll have a look at how the US market has opened. I think I've answered all your questions. Let's go back to the euro, everybody's favourite, and have a look what's going on after that. So, if there's any more default, if there's any more news. So, what happened? So, as I said earlier, the retail sales was a big miss. The most important part of the retail sales data, minus 2.3% compared to expectations of 0.2 of 1%. So it's a huge miss. Industrial production is weaker than expected as well, and capacity utilizations also come in under expectation. Not great, huge important number. Interesting is late data coming out of the US, the UK here. The Consumer Board leading index numbers coming out in fact, it should be out now. So industrial production edging lower in the US. Consumer Board leading index sort of more or less in line. We have got the University of Michigan. We've got the consumer sentiment and the inflation outlook from the University of Michigan. The important preliminary reading, the first reading for the month at 5 o'clock server time in about 30 minutes. So that is quite a significant bit of data still come. And Uber centrist Mr. Williams has also got a speech at 6 o'clock server time as well. So there's still a bit of potential market moving data today. Lagarde didn't really have much to say this morning. I forgot to mention about Miss Lagarde. She's still talking about price stability, the 2% inflation target. Inflation's running higher and hotter than we'd wanted. We are still talking about getting rid of the PEPP in March, so that's in line. Still a bit of a hawkish tilt, but nothing like we had from members, from other members of the ECB, and certainly from other members of the Fed. So Ms. Lagarde very much in line and doing what they need to do to support the European economy. So let's have a look at the euro. What's we done? Well, this is the 5 minutes. I don't know how long I've been chatting for. So a fair amount of volatility. Remember, we first. That's as the data came out there at 3:30. This is the 15-minute chart. So we weren't sure where we were going. So we were up, down, and we're biased lower because we broke lower. Then we've gone lower again. So euro, dollar here, 15-minute traders short there, out there for a losing trade, back in there short, and thank you very much. We've been short ever since. So that's continuing to unwind. The 1 hour time frame, that triggered. That would have triggered trending lower this morning, 11 o'clock from this rallied up we'd had. So can we hold 114 for the close of business today? Looks okay, doesn't it? We're still 35 pips away, but anything can happen. Never underestimate the power of the markets to surprise, but we're at a key level, as I said earlier, here on the 1 hour time frame. That resistance to the upside here at 114.40, and we're currently back to it now. So we've moved down from this morning, but that's a key area where we ambled through yesterday morning, having rallied up to it on Wednesday. So so see where we finish around with regard to that level intraday on the close of US business. US markets have just opened 5 minutes or so ago. Let me have a look at what that's looking like. It's a bit too early to tell. Nothing's coming through here on this station. Let's have a look. Down again. We've opened lower. The Dow's down over 1%. The Nasdaq is down half of 1%. Remember, the Nasdaq got hammered 2.5% yesterday, so we've opened significantly lower again today. The Nasdaq down 67 points. The S&P down 34 points. 3/4 of 1%, 0.75 of 1%. And the Dow losing the most, but it did held on yesterday, 1.1%. On the back of the bank earnings. Remember, we've had JP Morgan, the biggest retail bank in the United States, reporting earnings. The earnings beat, but outlook disappointed. Wells Fargo was fairly good. Earnings per share came in, I've got it all written down here, 138 per share versus 111 per share. Revenue was up massively, 5.75 billion compared to 3.09 billion, and revenue was up at 20 billion compared to 18.5 billion for Wells Fargo. BlackRock into the $10 trillion fund manager level. Larry Fink doing very well for himself, dominating that market. BlackRock, very strong numbers as well. Treasury yield yesterday closed at 171. We're currently trading around on the yield. Treasuries up a bit, up 2.5 points at 172.29 from that 171 close yesterday. So banks done well. Outlook's not as good as the market was expecting this quarter. From Refinitiv and FactSet, earnings are expected to rise for the fourth quarter of 2022 by 22% compared to the fourth quarter of 2020. So another hefty rise for US earnings this quarter, this key fourth quarter. Addy's saying, have a nice weekend. I certainly will, Addy, and I hope you do as well. Gerson, thank you very much. Congratulations. I haven't done anything, Gerson, my friend. I'm just here doing my job. I love my job, and I could stand here all day talking, but I'm getting a bit tired now, to be honest, because I am actually stood up. I'm not sitting down, and I've got one of these rising desks. I love it. I think it's fantastic. I could certainly recommend a rising desk so you're not sitting down all day, my friends. So anyway, any final questions? Let me just go over to our colleagues over on Facebook and see if there's anything over there. Where have I gone? Oh, hang on a minute. Where's my hot Forex? There we are. I presume you've disappeared if you were in earlier. No, I just see anybody else questions from before. See if there's any more questions I've missed. Let's have a look. No more questions in there. So that's all good, my friends. Have a lovely weekend. Stay safe. Love to your families. Stay safe. And as I always say, may the pips be with you. We'll see you all next week. We'll do this again next week a couple of times, if more. If you want us to do more of these and less written articles, let us know. We're here to help. And in the meantime, stay safe, and we'll see you all again next week. Have a great weekend, everyone. All the best. Bye-bye.